The euro continues to stay in established range ahead of the European Central Bank rate decision and press conference today. The ECB is expected to leave the main refinancing rate unchanged while no further change to standard programs are expected to be announced. A focus is whether President Draghi would tone down his rhetoric and indicates that he's still open to further unconventional measures or even another rate cut. Another focus would be on Draghi's view on the recent strength in the euro. French President Hollande expressed his concern over the euro's strength earlier this week and urged that eurozone leaders shouldn't allow the euro to fluctuate, according to the mood of the market. However, German Chancellor Merkel's spokesman Seibert noted that exchange rate policy cannot achieve sustained competitiveness, and isn't an appropriate instrument. Seibert noted that the recent gain in the euro compensated for a massive depreciation during the debt crisis and that's not such a bad thing. Greek Finance Minister Stanaras, though, said he's concerned about the high level of the euro. Some volatility might be seen in the euro today. But overall, we don't expect any drastic development to change the bullish outlook in the common currency in euro-dollar, euro-yen, euro-sterling, euro-Aussie and euro-loonie. The Bank of England will announce the rate decision today and it will likely be a non-event as the central bank keeps rates unchanged at 0.5% and the asset purchase programme at £375 billion. The main focus will be incoming Bank of England Governor Carney's testimony to Parliament's cross-party Treasury Committee. Carney surprised the markets last year by advocating nominal GDP targeting, which has the central bank tolerate higher inflation while expanding quantitative easing. He also noted that policy in development countries isn't maxed out yet. He will likely face some big questions from lawmakers and his responses will be heavily scrutinized by the markets. The committee has already noted they will ask if there may be a better monetary policy for the UK. We'll pay close attention to whether Carney's comments could trigger another round of sell-off in the pound. In China, the People's Bank of China's warned in a report that economic recovery and demand expansion may pass into CPI in a relatively fast manner. The report noted that, with the help of macroeconomic policies, the country is expected to keep stable and relatively fast growth. Meanwhile, monetary easing in developed countries may make global capital flows more volatile, push up commodity prices and generate a greater spillover effect on emerging economies. The report signaled that while further monetary easing is possible, the room might be limited. The New Zealand dollar weakened earlier in the session on mixed job data. Employment unexpectedly contracted 1% quarter-on-quarter in Q4, versus expectation of a 0.4% growth, while the unemployment rate dropped more than expected to 6.9%. Australian employment data was solid with a 10,400 expansion in January while the unemployment rate was unchanged at 5.4%. The National Australian Bank business confidence dropped to -5 in Q4. Japan machine orders